All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Today I sat back after this morning's video and I've just been absorbing. I haven't done any trades or really considered entering anything. Just watching, absorbing. Turned on the TV for a little bit, which I just typically don't do. To kind of see what's being said out there. Went through a bunch of different things and really just tried to absorb everything that was going on. Before kind of formulating any real thoughts on it or kind of saying anything that was too dramatic or too different with everything going on. You can go out there and it's very easy to find the bears that are calling this is the end of the world, blah blah blah. You know what I mean. There, it's one where you could find the extremes. There are some dip buy calls out there as well, and those are all well and good, but they don't really help on a day like today, and they are such that there tends to be an emotional investment into them rather than something a little more analytical or a little more logical and rational, to go with them. So I want to start this video out by showing a chart here, and yeah, I have this this overlay here, and I have this overlay for a reason. I'm not showing you these stocks here. What I'm looking at is this big bad red candle right on the border of the two web pages here. If you can see that, it might be a little bit small, but this is October of 2018, and we saw a big sell off. The market had done pretty well most of the year, and it had a little sell off here in March, but then it had this big drop right here, and it was very outsized relative to what the market had gone through. Very different in terms of feel, very different in terms of metrics and everything going on. Very similar to today, right? Today's magnitude is very different. Today's just general feel is very different from a price action standpoint. And we had this happen here in October 2018. We had this happen again a little while later. We had this happen right here last year in August, where in about 3 days, the world's going to come to an end because U.S. and China are never going to be friends again, right? And okay, market had a drop. It felt a little outsized, but even then, it wasn't all that big compared to, some that we saw here in May. But the point is this. When we see something unusual or outsized in terms of pricing in the market, we almost never see something V-shaped right off of it. Almost never. It is very rare. I had a hard time finding any going back through history. You could find them when they're coming off of lower lows and they're exhausting and then up, but coming off of a high and this big of a drop in 2 days, 5% drop in 3 days here. Most of the times it plays out in one of the two ways that we see on this chart. One way is that the path of least resistance is lower after some massive chop. Massive chop. The other is we get some massive chop and then path of least resistance higher, but it's muddy. We saw that late last year. This is how most of them play out. Now, I'm talking about outsized moves given the context of the market, right? We can go back into other markets where the market's used to being choppy and dicey or something like that, and then you get these big moves, and yeah, they can be bottoming. They can absolutely be bottoming. In fact, if we come in here, we had this massive move right here in December, and it ended up being bottoming, but the market environment was very different. But when we are in this type of an environment where it has been this bullish or this, calm, whatever you want to call it, there's a million different adjectives that people throw around for it. But when we get this type of abrupt change, very rarely, do we get a do we just get a big nice rebound. It's not too uncommon to find this type of action where we get a singular pullback and then rebound to new high. But to get this magnitude of drop, this is a very different drop than what we saw in January. To get this magnitude of drop and just some massive rebound off of it is very unusual. The one I want to compare it to and kind of show here goes back to 2007. And this is something I remember very well. I traded this. I was heavily involved in this, and the market, had just been kind of just grinding on higher. Not too much going on. A few down days, few up days, higher highs, higher lows. And then we woke up to this. They called it the Shanghai swoon, and here's China, causing the market to have one of these just massive outsized days, and pretty hard drop. And what happened afterwards? Well, the market did go hit a new low, twice, and then rebounded, but you could see some of the chop. You could see it took about a month for it to wear off, then got the upward move, a little pullback, and then, okay, all cleared, let's go. Right. Even then, took some time. It took some time to, shake up, to shake out. And that is just something that we're going to be looking at here in this market going forward in the next several weeks, a shakeout process. Now, for those that have been watching some stocks like Amazon, like myself, watching Amazon go higher, and I'd love to be a buyer, but just have not had a area to enter, it's going to create those opportunities. I say that, but I don't mean it's going to create it today or tomorrow. I'm saying over the next 2 to 3 weeks, we will likely see some decent upside opportunities in some of these stocks that fall. But there will be a risk associated with it, because very often, and in fact we saw it in October of 2018, very often we will get a sharp, sizable bounce and then a push back to new lows. I do think there's that risk in the market right now where, we can see a sharp, sizable bounce, maybe back up here to 330, 332 on the SPY, and then another secondary fall. I think there's a good chance of that. And it's something that, different stocks are going to do different things. But it's not going to happen tomorrow. It's not going to happen, in the next day or two, right? But it's just going to take some time. But I would not be surprised to see some sort of, kind of retest into the gap, maybe not a full gap fill, and then something of that trajectory. Now, some news will have to come in for that to happen, but I do think if we come back and retest these levels after a rally and the bulls get bid again off of a lower high, the sellers are going to get pretty aggressive. And I think this is the scenario of probably path of least resistance, right? Path of least resistance here with it. But, will it shape up that way? And we'll see here overall. When it comes to the challenge, it's something where, what's today's action matter? Well, it matters in terms of, okay, it's creating movement. But in terms of execution, okay, signal, option value good, go, right? That's all I'm looking for. And that's all I'm doing. I'm not, I'm not sitting there going, oh, well, we just had this move, so how does it affect the algorithm? It creates a lot of downside crossovers today, which it has. But there's only one trigger on the board here, and it is a bearish trigger. And unfortunately, it's a bearish trigger. I just can't trade. It's Target, and they have earnings upcoming, and the options are they're just ridiculous. When I didn't get into the options on Friday with JP Morgan, Nike, MGM, they were about 10% overvalued, right? Target, we are looking at something significantly more severe in terms of overvalued because of the earnings priced in there for it. So just not something I can go after and trade. Most of the other downside crossovers are things like CSX, where we're finally seeing these stocks come off of their highs. We're just not going to get a new signal off of highs, so not something I can go after. But a lot of the stocks on that downside crossover list are just that, coming off of new highs. Here's Procter and Gamble. We were in Procter and Gamble when it tried to break out and failed, ended up getting knocked out. Tried to break out again, today gives a little fail. I wouldn't be surprised to see things like this, potentially set some bullish signals as early as tomorrow, especially those that have sold off on fairly light volume compared to the rest of the market today. It's a very high volume day. But, as far as Caterpillar and a lot of the other downside crossovers, just not seeing signals on them. The chance of moving to average true ranges from this point is relatively small. Now, I don't necessarily disagree. I don't necessarily agree with that. It's one of those where I do think there is some downside risk associated, and something that has to be taken into account. But as far as for a challenge trade setup, it's just not there. So I'm going to go into the close here today with cash, and look to trade the coming signals. Okay. So that leaves challenge. We've had our first double. We're up in the 6,500 area, and ready to pounce should a signal come on in here for it and be able to run. The overall market metrics, they have changed to absolutely bearish. Take a look at the bullish percent index here today. We don't normally see a move of this size and magnitude to the downside, and typically when we do, there's further downside. This isn't just a small corrective drip type of thing. This is something on mass moving where it erodes 15% in one day. Bullish percent index, or excuse me, the advanced decliners here, NYAD, number of advancers versus decliners. This is the type of kind of just throwaway type of day. What's interesting about it is it's not necessarily because there's massive selling. In fact, if we come in and look at S&P futures and where they sit, and I'll show you this. S&P futures opened right here this morning, and they're actually higher right now than where they opened today. And that has been a common theme on the bigger gaps down. So when we look at a lot of stocks, you go look at Netflix. Has there been more buy pressure or sell pressure today? I know, we had the sell-off kind of midday, and we're getting a little rebound now. But, has there been more buy pressure or sell pressure in Netflix today? I know the stock's red, but more buy or sell. And for a lot of stocks out there, the stocks are red, but there's been more buy pressure. We just don't see that very often. That is very unusual, and that is one of the reasons why I do think we may be in for a sympathy bounce or small rebound. Here in things, we see some money starting to come out of different safety zones. Take a look at gold. Take a look at how far gold is off of its highs. 1691 down to 1650 or 1660. It's $32 off of its highs. That's pretty massive. Here without the market itself having something massive going on there with it in that same time period. If you look at the VIX, you can see the VIX really coming down off of its highs here today. And so while am I going out there and just saying let me go buy Adobe because it's going to go up? No, I'm not, because I'm not convinced I can make money on the options if it does go up. So I have to be right, and I have to be right in a huge way. But it's one of those where I would not be surprised to see some relief buy come in. And then, some questions definitely will have to be answered by the bulls and bears. The bulls still have the argument of, okay, where else are you going to put your money, right? Where else are you going to put it? Fine, you just sold stocks. Now what? All right, all right, fund manager, you now freed up a whole bunch of cash. Now what? Oh, you're going to wait for a dip in the market? Okay, what are you going to do if the market starts to climb again? What are you going to do? And that's why at the beginning of this video, I just brought up that thought or idea of this, this just kind of slow, steady gap fill element here before perhaps some further selling. I'm not saying that's what's going to happen or predicting that that's what's going to happen, but in terms of, the bearish scenario, I think that is perhaps the most bearish scenarios because you would get rid of the rest of the dip buyers out of the market here. Okay. All right. So challenge going to go into the close here with cash and look to react to the next signals here. And see what happens with some option values. Option values are obviously pretty highly inflated here today, but even right back here when we had this drop, right, we saw a relief day or two to where the volatility dropped, and the element of a bearish market vibe here suggests that going forward we are going to have big rallies and we're going to have some big drops. The volatility is going to increase, and we don't see 2% rallies in the market when conditions are strongly bullish. We see 2% rallies in the market after some big sell-offs, and that does bring that risk into play for the bears, or today's price action brings that risk into play here for the bears. Now, as far as my shopping list, right, I mentioned this morning I have a shopping list of some stocks I'd like to buy on pullbacks. I haven't had a chance to, really get involved in them the way I want. Chipotle and Starbucks and Boeing and all of these. I have not added anything. I haven't added a thing. I haven't, stepped into anything. I'm very tempted to step into some Netflix here today, and I may just put on a little partial there, but I have looked at it and I've said, okay, you know what, it could be a singular dip here and things just move up and that's it from this point, but that would not be the norm, and so I can give myself a little time to to say, all right, do we start to close above the high from the prior day, and be able to look and say, all right, when Bank of America starts to close above the high from the prior day, maybe I'm a little more interested than with it where it sits right now. Thanks for hopping on. Have yourselves a fantastic afternoon, and we'll talk to you tomorrow. Take care.